Great. Great. So thank you for being here. My name is Alina SOLTYS, and I'm with Quorum Group. So a quick slide on what Quorum does. We work with technology companies over the last 25 years, helping them on M&A transactions. We've done over 300 transactions worldwide. And over half of our deals are actually cross-border. So we work with a lot of countries and companies in the countries of Europe, the States, as well as Asia. So a brief overview of what I'm going to be talking about today. Technology M&A, first of all, to set some context in terms of what's going on. There's a lot of activity. There's a lot of news stories every single day that people are paying attention to. What does that look like in the gaming space in particular? And then also talking about some of the driving trends that we're observing that are impacting both innovation, buyers' interests in certain kinds of companies, as well as some things for you guys to think about in terms of when and how you're planning the next couple of years out, where you should be. So this is an index that we put together of publicly traded technology companies going over the last 7 quarters here. And what you see here is 2013 really became kind of a stabilizing force. The economy and confidence had returned. And then we have 3 really great quarters of strong performance. And the reason why I'm showing this chart here is depending on the confidence of publicly traded companies, as you see through investor excitement about certain companies, that heavily impacts M&A activity. So the higher confidence levels in the economy, in the industry, company by company, allows them to take those big steps, use their cash positions to do big deals. And there's a lot of deals happening. So here's a chart of the top technology acquirers out there, 2013 to year to date. So Google and Yahoo are really in an arms race here of trying to buy a company a week almost. And they have been, the companies here in green are companies that have done gaming transactions as well. So you see Microsoft, Yahoo, Google, Facebook, all acquiring gaming or gaming-related companies. And taking a little bit of a closer look at that, the most exciting company on here that we can talk about in terms of acquisitions is Yahoo. So Yahoo has been building up its team on mobile. They've done 30 plus transactions from a mobile side. And just recently, as everybody's talking about here, Flurry was announced. And it really positions Yahoo in a very strong way to address the mobile ad tech market. They are seeing declining revenues or flat in terms of desktop advertising spending. And so Flurry really adds not only the data dimension and all the great metrics on that front, it also adds the ad network side. And this is reminiscent of a deal that Google did 5 years ago with AdMob. And you can see how strongly positioned Google is now on the mobile ad exchange side. Facebook is on here as well. They did a similar data-driven acquisition with Onavo. Really gives them a lot of great insights in terms of how users are using apps, how much time, where. And then they're also working and developing Parse. So a lot of you may be using Parse for various developer services on Facebook. So that is an indication of what Facebook invests in and also puts power behind when they bring a company in. And this is a great example also going into Oculus. So I'm not going to talk about Oculus in a lot of detail, but one thing I do want to say from the M&A front is people were always concerned about a big company coming in, changing the culture, especially of an innovative company like this. And Facebook has had their hands off of it. They've kept it independent. They've been providing funding for them to continue doing acquisitions. So even as this deal is still closing, they've already went and gone ahead to do 2 more deals. So they acquired a Seattle-based company called Carbon Design Group. They are responsible for the award-winning Xbox controller as well as the Kinect system. And then more recently, they acquired Jenkins, who makes RackNet. which is software development tools that allow for cross-platform communication. And more interesting, they're also following Google's example here. So in an effort to build out their developer community, they open sourced RackNet, so now it's available for all developers to help build more cool games. And I think this is a super exciting aspect, and also very interesting to see how gaming studios take advantage of the virtual reality aspect here. So I'm looking forward to seeing some great products. On the gaming side, so I'm excited to be introducing this chart here for the first time at Casual Connect, and my team and I put together a view of what's been happening in the gaming ecosystem over the last 5 years. This is taking a look at half years, so January through June, and then July through the rest of the year. And what you see here are companies that are both gaming studios as well as those involved in the general ecosystem. So they may be ad-related networks focused on gaming. There's some infrastructure companies in here, and I've pulled out the deals that are swinging the needle much more so than usual. So you see those in yellow at the multi-billion-dollar transactions. And if we take a closer look at what's going on, we've had more deal activity in this first half of this year, more so than in the last 2 years. So you see that coming back up to some very nice highs. We had a record 2013 year in gaming, as well as technology M&A. And we're seeing a very strong first halves, right? So this year has been the strongest first half, with $2.27 billion worth of transactions, and then the ending of 2013 was the highest over this entire period at just over $3 billion. What does this mean on an individual deal basis? Well, over 5 years, the average deal has almost doubled, going from $42 million to 84. Year on year, this is kind of interesting too, we've seen a very big increase. And what you're seeing is the lows are continuing to increase, which means that buyers are spending more money on established companies. So they want to see those who win the battles, those who make it to a certain point in their lifespan, and then they grab the attention of some of the buyers, like those coming out of Asia. So Asian buyers are responsible for the top 9 of 10 deals in 2013. They're doing transactions around the world. They're doing transactions in Europe, in the States, and also a lot of regional deals. So you have companies like South Korea's Gameville that put aside $150 million to spend on investments and transactions. They acquired Com2us, which was a bigger company. It was more international, it had more games, it was more established, and then they spread their resources and acquired them, and they're doing really well there. Chengyu recently announced that they're putting aside $600 million for mobile game developers. They're going to spend a third of that on acquisitions, a third on marketing these new companies and investments that they're working with, and then a third on revenue share with their partners. You may ask, how are they and why are they doing that? Beyond the obvious, here's some data that points to why M&A really matters for a lot of these companies. So on their own, there's very strong organic growth in Asia. We know that there's a lot of people there. There's a lot of innovation coming out in terms of people are spending money. But more so, the 3 companies I have highlighted here, which are Chinese publicly traded companies, within their media segment, they are the fastest growing companies. And they're doing that through acquisitions. So we have Alpha, ZQ Game, Our Palm. They are continuing to reinvest much of their earnings into doing these kinds of acquisitions. Do we think it's going to stop? Likely not, given all the data that we're showing here today. There's much more to be gained within Asia, and you can see those earnings being transferred into continuous M&A activity. So we're very bullish in terms of where things are going, and taking a look at some other countries that are popping up in other regions. BRICS, we've been talking about BRICS across all the other industries and how they're growing up, and gaming is no exception. So right now, Brazil and Russia, in terms of downloads and revenue growth, are outpacing US and Asian markets by more than 2.5 times. What does this mean? Well, it means that Russia's market has tripled in the last 3 years. So in 2013, they did $1.1 billion. This year, expected to be $1.5 billion. Eastern Europe's largest internet company, Mail.ru, is creating a separate division called My Games, where they're working on publishing some new games and taking advantage of that. Brazil, the largest country in Latin America, is also experiencing significant growth, expected to hit 1.8 billion Latin American market in 2016. So Russia has now become the second largest online gaming market in Europe. And the interesting comparison here is both of these countries are growing very quickly, but the kind of gameplay and the type of gamers that they attract are quite different. So in Russia, you have very strong PC-based users. They have been finally moving from a more piracy-based system where it's hard to really tell how their revenues are coming from into free-to-play. So they're actually paying for products. Mobile is also growing very quickly there as commute times are very long, and so what you see is somebody gets into a subway and they're always on their phone gaming, similar to what we see in China and Asia as well. On Brazil's side, the fact that they have very high import tax, it's making it very restrictive for people to own consoles. So at the end of the day, it costs 2 to 3 times more than a retail price in the United States. So that's pushing more of the gaming market into mobile and PC, as both of those are also increasing. So this brings me to driving trends and what we see as happening that's impacting where we see the future. So taking a look at some of the things that have been changing recently, messaging has taken over significantly. It's essentially created its own ecosystem similar to a Facebook, where within one place you can now do everything from gaming to ordering a taxi to checking on your various bank assets. Like within a WeChat, they have a payment system inside. So essentially you go there and you don't have to leave. And Tencent is realizing that and beginning to court developers to develop AAA style games, to develop high-end games, as well as free-to-play focused to continue driving their growth on the platform. They're monetizing very well. We have KakaoTalk in South Korea. We have Line, who has been experiencing tremendous growth, and now they're planning on IPOing in Tokyo. And what that means for traditional gaming companies like DNA is they're seeing instant reaction in terms of their revenues. So this last year, they've had their revenues decrease 10%, and that means something needs to change. And either they're going to be opening up similar platforms to compete with them, or they're going to be competing on other fronts to continue growing their revenues. Korea and Japan, so if you look at the top iOS games as they were downloaded, the whole list is practically green. These are all based online or KakaoTalk platform. And what this means at the end of the day, that we have at least 950 million users, potentially more. And for gaming developers, you have a captive user base that is used to opening up these apps multiple times a day, so you have very high engagement. And it's also very simple to slide the screen or press a button and go to your gaming console and start playing. Candy Crush is paying attention to that. They partnered with WeChat to help drive their positioning in China as well as other markets here. So they're a top 20 game on iOS and Android in the States. It's much harder to do so in China, given the very disparate sources of app stores, and there's not a clear leader in many cases in other countries. And so going through a WeChat platform opens up the doors for their game to continue doing very, very well. And you're seeing that on the M&A front. So within a matter of weeks, we saw consolidation happen very quickly. Similar to what we're seeing with the mobile ad tech, that with Flurry and Twitter jumped in and did tap commerce, you're seeing this here as well. So Facebook brought in WhatsApp. We're still waiting to see how WhatsApp is going to be monetized. They may be taking some other steps and other focuses, but there's a good chance that they're going to go through the gaming angle as well. Tango took 10% of their total investment and set it aside into a dedicated gaming fund. This was just recently announced. So they too are looking to monetize through gaming. The second trend that we're paying attention to is social and real money casino companies. So Caesars continues to improve their position. They went from 16% market share last year to 21% this year. And they're doing it heavily through acquisitions. So they have Playtika. They recently brought on Pacific Interactive earlier this year. And the interesting thing about this chart is you see the same names over and over. So you see IGT, you see Zynga, you see them showing up. And what it really means is, there's over 1,000 social casino games out there. Those that are growing the quickest and that are driving attention from these buyers are being acquired. And that's how you get on their radar, and that's how they're continuing to drive their market share higher. So I wouldn't expect this chart to change much, and considering the fact that 46% of total revenues right now are in mobile and they're continuing to grow, there's a very good chance that they're going to be acquiring more of those mobile operators that are doing very well. And this too, some of these deals were mentioned earlier. This happened all within less than 2 months. So billion-dollar sprees, consolidation is happening. Aristocrat reached out for VGT. They needed to get some more Native American tribal casinos in, so they increased their market share from 5% to 30% with this one acquisition. Canadian publicly traded Amaya. Who would have thought that they could reach out and do a $5 billion deal? Very few people. And they worked with a lot of partners, layered it up with debt. Now they're considering IPOing PokerStars and listing it publicly. And then GTech, based in Italy, stalling market, it's in decreasing 6-7% a year, decided to reach out for IGT. You have US exposure, you have slots, you have a good social casino gaming position already, and certainly a very strong move and smart move for GTech. Another trend way of doing business that we're paying attention to is games as a service. So the concept of SaaS is not new in technology, and it's directly related to games as a service, where you're continuing to deliver value to your gamers. And at the end of the day, what this means is players are going to pay you if, when, how they choose. If they're excited about your game, that's when you're going to be able to monetize them. And so you really need to start thinking about the whole brand experience from beginning to end. So the first vision that they see of your company, the trailer, throughout the entire game, the presence that you have online afterwards really makes a big difference in terms of, are those players going to keep coming back? And are they going to be monetizing? And so that's the third bullet here, is the analytical component is key. Understanding what makes your users tick. It's not new. Everybody reports this. I think gaming trends and data points are so readily available that it's almost becoming a little bit more of a numbers game, but don't lose focus of who the end user is and delivering that consistent appeal to them. Almost as advertisers and marketers do when you look at a brand that brings a lot of emotion to users. Consoles. So consoles have grown 20% in revenue this year, due in part to the new generation of consoles, but also I think there's two main things that are happening here. So the first side, you see the consultainment kind of space where you're moving beyond just the core gamer into the family room. So you're bringing in users who use all these various services that layer onto the console. And also, developers are getting creative in terms of how they monetize. So we're seeing microtransactions really make a difference. Grand Theft Auto, within the span of a few months, received $30 million more in microtransactions for doing various sales on top of their existing revenue model. And then lastly, I don't hear a lot of talk about security, but I certainly believe that it's going to be the next challenge many of these large companies are going to be dealing with. Mobile traffic is just so huge, and it's at risk of becoming more of a targeted environment. So you see 97% of Android malware coming from Asia and from the Middle East. And you see the Asian companies actually paying attention to that. So these companies have payment gardens somewhere within their corporate environment, and they are on the forefront of being targeted, right? So they're doing these acquisitions to continue to be ahead and have a really good secure interface so that users are not concerned with their safety, rather they're enjoying their experience while they're there. So to land on this slide, we talk with companies all over the world in very different situations and scenarios. And I think one thing that I can tell you for every audience member here that's going to be relevant is kind of the top things that buyers are looking for. And you can figure out where you are within this scope and how attractive your company could potentially be, and also what to focus on. So buyers want to see growth. They want to see revenue growth. They want to see users. They want to see traction. Very rarely do you have a startup idea that's not proven out attract a lot of attention. Once you're at a certain place in your development where you can start switching to profits, those become important to maintain as well, along with the growth. From a technology standpoint, having a cross-platform game that is easily deployed, you have rev cycles that are very quick to incorporate and push out across all environments. You have a very solid infrastructure layer, as well as having the analytics that you understand who your users are, all provides a lot of confidence for buyers when they're looking at your company. They want to be able to acquire somebody and be able to introduce it very quickly and have it scale effectively across to all of their users without having to do a lot of rework and redevelopment to incorporate it into their systems. So that was my presentation. I can make it available to you. That's my email on the bottom, and I'm happy to take any questions and talk individually with you guys. I'll be around. Thank you.
Anyone? Sorry. Had to turn it on in the middle of me saying that. Does anyone have any questions for Alina? All right.
What's the threshold where it becomes interesting? What's the revenue or profit threshold?
Yeah, so the question is, when does a company become interesting from a revenue and profitability perspective? And I think it really depends on which sub-segment you are in and how other competitors are. Are you all growing up at the same time, so you have lower revenues but very interesting technology that's scalable? So you're seeing that more so from an infrastructure side with development tools? Or are you a solid gaming company that has multiple titles and you have lots of users, so then you're expected to have higher revenues? And depending on how long you've developed the game from, there's certain expectations for profits. So I think it really depends on where you are, both from a tech side as well as from a market perspective side. Could talk some more if you have a.
Go ahead.
When you see the activity around some of the analytics purchases, like just about Ant-Man and Laureate to Yahoo,
Yeah.
is there significant consolidation there? Or?
Yeah. So you're naming the top players in the data analytics space. And similar to what we talked about with the ad tech side, with the casino games, consolidation happens very quickly. And some of the best players have just been picked up. So what you're going to see in terms of next level transactions are usually going to be somebody who does it a little bit different and has value propositions that the three that you named don't. And that's what's going to either drive further consolidation within that three, or other players stepping in and using that solution their own way. But it happens very quickly. Yeah. And everybody knows who the top players are, and so they get taken off the table.